Hello everyone, welcome to my channel. My name is Jay and I'm based in Singapore, currently serving my mandatory full-time national service. And in this video, I'll be sharing about something that a lot of my friends have been asking me, which is how do I get started with investing. A little disclaimer before we start the video, I am not a financial advisor, and all the things that I'm sharing with you should also do your own due diligence before you put your money into all these investments that I'll be sharing with you. So all of these things that I'm telling you is based on my own experience and all the books that I read throughout the years. If you're watching this video, it also shows that you know and you understand why you should get started with investing as earlier as you can. So without further ado, let's jump right in. Point number 1, understanding the difference between investing and trading. Many new investors are often misled by the general public, i.e. the social media, about how trading and investing are the same. They are actually not the same. Where investing is actually very boring. It requires you to hold for a long-term time horizon, which is about minimum 10 to 30 years. Whereas for trading, you are actually required to consistently time the lows and highs of the market, buying at low and selling at high. So this is not very ideal because you have to do it consistently for a long time compared to just holding and just holding out for the rest of the time. On top of that, the proper way of investing is taking advantage of compound interest, which I'll be sharing more later on in the video. So point number 2, the different types of investments. Whenever you hear someone talking about the market, they are usually referring to the S&P 500, which is the top 500 companies in the US. So they are all publicly traded, you can buy and hold. So these are usually referred to the market. However, there are 3 different asset classes which you can invest in aside from the S&P 500 or the stock market in general. There is the REITs, the real estate investment trust, the bonds, and also slightly higher risk, the cryptocurrencies. Point number 3, which one is best for you? All of these asset classes, which should you invest in them? It depends on 3 things. Okay, these 3 factors. Number 1 is your time horizon. Number 2, your commitments. And number 3, your risk tolerance. Generally speaking, when you are in your 20s, you have a longer time horizon. I would say you're recommended to put your money into something that is higher risk, which is the stocks, something like the stock market, so that you can have your investment ride out for the long time. So for example, what are commitments? Do you have a house to pay for? You don't have any children, so you don't have to take care of any children. So in case anything happens with your money in the market, you can earn it back throughout the years. Compared to when you're in the 50s or 60s, you really need your money to retire. So this also correlates to your risk tolerance. Okay, so for me, generally speaking, in my own opinion, I feel that when you're younger, you should take on higher risk investments. Point number 4, stocks and crypto. If you have a long horizon for your investments to go and also no commitments, you are able to tolerate a higher risk investment, you should consider putting your money into these 2 asset classes. I will go into detail about the type of stocks and the specific cryptocurrency you should invest in videos to come. Point number 5, bonds and REITs. So if you are on the other end of the spectrum and you're planning for your retirement and you don't want to let inflation eat away your money, you should consider putting your money into these 2 investments. Point number 6, compounding your money. As you should know by now, investing your money is actually taking advantage of compound interest. So this is essentially putting your money to work without you actually working. So instead of trying to time the low and highs of the market and making it seem like an enjoyable game, which it really shouldn't be, you should consider, putting your money, investing for the long run, for a minimum period of 10 to 30 years. And of course, using this spare time, instead of timing market, you can find ways to earn more money and invest more money into the market so that your money compounds even faster. So that's all for this video. Thank you so much for watching, and I hope you enjoyed it and hopefully learn a thing or two as well. I'll be making more of these videos in the future, and of course bringing you guys along my investment and productivity journey. If you like the things I share and talk about, do give this video a like and subscribe to my channel. I'll see you in the next one.